that thing were to pop up, they don't have a story as to why they donated this money to this conservation. Their argument is, I wanted a tax write-off. All right. Well, you just moved it from gray to black. You have no narrative. Mine is, I just wanted to not pay it. Okay, that's not a narrative. It's that. So, a conservation easement, let's say, would be something's in the gray. But tell me your narrative as to why you were able to do that. And if you don't have a narrative why you're able to do it, it's simple. Now it goes to the black side. Okay? You can take something that's in the green. People in this room do this one. Something's in the green, and you turn it black. But it was green when it started. But you and your Houdini magic turned it black. Okay? I'll give you one. Green, you can deduct different types of cars and expenses. That's green. Okay? The way most entrepreneurs do it, 100% black. But it's green, you can do it. But how you do it will be black. For like a lot of you in the room, like you bought a car and you write off that car, or you did bonus depreciation on it at the end of the year, and you write off that car in your business. Now look, if you own a security company, and one of my clients owns a giant security company, they probably have 300 security cars. Okay, those are tax write-offs. You didn't buy a security car for your company. You bought a Range Rover. Which is still okay. I'm not even saying you can't do that. I'm saying in an audit, when it comes out, it's simple. They're going to say, hey, you wrote this car over here. Is this your business car? Yeah, it's a business car. That's what I drive for business. All right, perfect. You can do that. That's totally fine. If your business owns it and that's what you do with it, totally fine. You can run it through a car factory. Their next question is going to be, where is your personal car at? You don't have one. You have a business car that you use for everything, but you wrote it all off. Okay? Green, black, you're dead to right. It's that simple. It's not difficult. You can probably go through all your financial treats and just understand they're all probably in the black right now. Start in the green, you probably made it in the black though. So, what I'm saying to you is understand when you're sitting across from the I have 3 attorneys that I work with on a consultation. One of them I hired from the IRS. It was an IRS auditor that was an attorney, and I hired him. I was like, well, shit, I need some inside information about what you're doing over there. And I have an IRS attorney, a previous IRS attorney that works for me on my team. And inside of it, I do this with him. Like, I'll sit down across the conference room with him. He wears a bow tie every day. Like, you would think that guy's an IRS attorney. If you see him, that's what you carries a briefcase every day to work with a bow tie. Do you see what I wear? I'm fully dressed up right now. I can teach or go to a wedding. Either one right now. When I'm at the office, it's less than this. Okay? And this guy wears a suit and a bow tie and a briefcase every day and shows up to work. Okay? And sometimes I'll sit across from him and play it out. Like, all right, let's go at it. And I walk through different narratives and let him poke holes in shit for me. And I'll say, yeah, okay, but I'm doing for this over here and this right here, and I'll do it with him. Just so I can better understand the process. My point is just understand, you have to have a narrative as to why you're doing that. Now, if me and this IRS attorney disagree, but I don't have anything in the black, which means I have a lot of leverage and he does not. Okay? If we disagree and he won't negotiate with me, all I have to do now is say what? All right, let's go to court and settle it. Here's data that you won't get told anywhere from attorneys, tax attorneys, and so forth, CPAs. 19 out of 20 cases that are scheduled to go to trial for taxes, 19 out of 20 of them settle before they ever step in a foot into the courtroom. You'd have to understand on their side how it works. This is how, I'm not going to tell you who, but tax attorneys explain it to me who go to tax court. They said, listen, doesn't work how entrepreneurs think it works. How we, as entrepreneurs, how we look at things. We're like, if we won, it's good. Think about corporate America with a bunch of red tape. And in corporate America, it's not entrepreneurship. It's corporate America with a bunch of red tape. And inside that red tape, there's certain things that you can do and can't do. And this is a W-2 employee. What is this W-2 employee trying to do with their career? Advance. Go up the corporate ladder. All right? But to do that, they have to play the game of politics. Kissing the babies and shaking hands. Take the corporate structure that has all type of red tape on it from a company that has 5,000 employees. That's a lot of red tape. It's going to be on anything. Now put the government on top of that shit. Now how much red tape do you think is on that? Bro, it's a lot. All right, so here's what they're saying. They said the attorneys who have to go to court, you would think that the way that it would work is if they were to take somebody to court over something that's gray and argue over something that's gray and win, and a judge ruled on this thing, and now it went from gray to now it's black. So now no one can use it, or no one should use it, because the judge ruled and the IRS won, and now this is what was gray, it's now black in the case. You would think that's what they were wanting, and if they did that, they would be promoted as winning cases. And he said, it's not. This is corporate America inside of government with the same amount of red tape of how they move inch by inch up. And he said, the way that it actually works is, it's not that they get rewarded. That's how an entrepreneur would act. Oh, well, hey, I advanced our cause, if you will, and now these 3 items that were gray are now black. We're better off. He said they get punished for taking something in court that's gray and it going green. They do not get rewarded for taking something gray and making it black. They get demoted, looked over, because they took something that's gray, lost it, and it went green. We as entrepreneurs look at the growth of these 3 are now black. In that corporate structure, government side, when it's made, the rules are made from way, way up here, and it trickles all the way down to this IRS attorney right here. It's how they operate. So what he was saying was, look, 19 out of 20 cases, dude, are settled before they ever go to court at all. The ones that go to court, he said, well, guess which ones go to court? The ones that have a whole bunch of black. Red ones will go to court no matter what. We don't have to talk about that. The one case of the 20 that the IRS is like, all right, fine, sure, let's go. Is because they have 119 items over the last 4 years of you in black. So if you threaten court, they're like, okay, we'll go to court. You want to settle? No. Here's another piece that's crazy for you. Watch risk and reward. Right now, the average settlement that's coming out right now in these 19 out of 20 cases, you know what the average settlement is right now? No court. You sell it outside of court. 19 to 20 of them settle outside of court. And the average penalty that they are currently right now pushing out on their cases, they waive all the fees, they waive all the fines, let's call it, and they give you a 6% interest rate on that money. All right. Let's process that then. What the fuck does that mean? Risk reward. So watch. Let's say I have a grade 8. Let's say I have a grade 10. Screw it. I've got a grade 10. Am I breaking any rules? Am I doing anything illegal? Is it actually more green than it is gray though? It's actually more green or what? Yeah, it's actually more green. It's in the code that you can do this. It's just left for interpretation, and I'm pushing the limits of it, let's say. And it's a grade 10, but I can still do it, all right? And let's say that grade 10, if I take it, I'm going to end up writing off $400,000 that year of the deductions if I use this grade 10. And over the next 5 years, that's going to give me $2 million in deductions, let's say over the next 5 years. 400 grand, 400 grand, 400 grand, $2 million in deductions. Which means if I don't do that, I'm going to pay taxes on that, call it $2 million, which would be, let's call it like $600,000. Okay? All right, so walk through it. If I use this grade 10, perfectly legal, no rules broken. Aggressive engraved? Sure. Black? No. Do I have a narrative? Yes. I got $2 million worth of deductions for the next 5 years, $400,000 a year. I'm going to deduct, which means it's going to save me cash out of pocket. Check wires IRS, $600,000. Everybody got it? All right. If I take that grade 10, what is it telling me right now? It's telling me that I have less than a 1% chance of even getting audited. If I get audited, they're going to hit me with 2 or 3 things, and I'm going to be Johnny on the spot and pump it all right back out to them. If even past that, they're like, nope, we want to see more, and I get audited. Look, I know I don't have anything in the black. You now got to find whatever it is you're looking for in the gray, and I'm not going to tell you where it's at. You got to go find it. Whatever you find, I have a very good narrative as to why I did it. It wasn't that I was just doing it to do it. So we can have a disagreement upon this if you want to. But if you try to push really hard, which you wouldn't, but if they try to push really hard, I would say, all right, let's go to court. And I'll decide for the whole freaking entrepreneur economy, is it green or black? I think it's green. 19 out of 20 times they will settle. And when they settle right now, their settlement is 6%. No penalties, 6%. If I were to take that, what does that mean? It means that a way to look at it from a tax attorney, explain it to me this way. He said, in this example, Drew, let's say that if I offered you a $600,000 no documentation, no credit check loan at 6% interest, with a 99% chance that I'll just forget it completely, you don't have to pay back at all. Less than 1% chance that you might have to pay me back that money with 6%, but it's less than 1% chance you have to do that. Would you take that no documentation loan of $600,000 cash with a 99% chance it's going to get wiped away with $0 payback? If you struggle with that fucking question right now, you've got to really rethink a lot of shit in business, bro. If you understand taxes from that perspective, it will begin to make a lot more sense to you. It's a risk to reward. Stay out of the. If you do what I said, but you have 94 things in the black, it will work out the same way. If you stay out of the black, maximize the gray area for yourself. Doesn't mean you got to do every last thing in the gray. I'm not saying that, but if there's a gray one that fits and you have a good narrative and story to go do it, do that. Understand your risk reward, and there's a 99% chance you're going to get a no documentation loan, no paperwork filled out loan, no credit check for that in this example, $600,000, with a 99+% chance that it will be completely wiped away with no payments whatsoever. Less than 1% chance that I'd have to pay back the $600,000 and then pay 6% interest on that $600,000. Bro, I would take that shit every single day of my life. I would take that risk reward. 99+% chance of it getting wiped away. And my worst case is I gotta pay it back at 6% interest. Okay. Now do you understand how tax deductions actually work? Look at it from this side right here. In the green, play it, but follow the laws. Don't mix it up. Follow how it works. In the black, get out of it, bro. It's gonna hit you way too hard. Get out of the black. In the gray is where you play. 1 to 10, the immediate answer is yes. Then start asking questions. Look at the math for risk reward inside of it. What if my deduction was only $12,000 deduction? I probably wouldn't do it. I'm like, man, I don't want to do that shit. I probably would do it. But if it was $2 million, $400,000 that year, okay, and I got a good narrative for it, shoot, yeah, put me down twice, actually, please. All right, this is a way that as we move forward in class, we'll understand business structure and business taxes and how we structure everything out. This is how you can look at taxes and understand the tax system and method and understand risk to reward in a much, much better way, and sleep at night because you're not going to go to jail. You're fine as long as you don't, with intent, lie and deceive the IRS. You're fine. Stay out of the black, play the green, follow the green, run a line. In the gray is where you play, figure your risk to reward, and make your decision. That's it. Play that game right there. You'll actually do way better you are now. Do way better. Last piece I want you to understand as we play this game today. Here's how you have to start looking at taxes and to understand it. Okay? Step one in your life or business is you create money. Okay? So here's this money you created in your business. In 2024, 2025, you create this money right here. Okay? The current game that you play is to take this money and deduct it, which is to say, to move it to here. And on this side, here's when you created. When we move it to here, on this side, we lose that money. Okay? So we created, and the current model you play with deductions is created, and then get rid of it with deductions. Okay? Moving forward, the way I want you to look at deductions in business is you do step one, which is still going to be created. And from now on, I want you to look at it, how do you move this money to this hand instead? This hand is going to be, how do I take this money that I created in my business or personal life, and what strategies can I use according to the IRS law that I could keep that money and put it over here, keep it and not have to pay taxes on it. You want to create it and go here with it. Not create it and go here with it. Will there always be in business here to here? Yes, because your business has legitimate, real deductions. You can't deal with those. That makes sense? You can cut them, trim them, but those are real deductions. Okay? From now on, when you create money, how do we move it to this hand instead? And I'm not talking about necessarily tax-free accounts. I'm talking about deduction side of understanding business. How do I move it from here to here? And keep the money that I made, or play it at a level that I'm getting a massive financial break in doing it from here to here, versus here to here. When I go from here to here, I lose it, I don't have it anymore. Does that make sense? If I go from here to here, I get to keep it. I can lower my adjustable income because I'm going to deduct this shit over here, but I get to keep it still. Okay. I'll give you an example, and then we can start playing the game and start understanding it more. I'll start really small to understand it, okay? Traditional IRA. Okay? You have a thing called traditional IRA. I have one. Right now, you can put $7,000 a year in it per year. If you're married, you put $14,000 in it. Right? Traditional IRA. If I put that $7,000 in a traditional IRA, it is a pre-tax account, which means it's not tax-free, but it's tax-deferred right now, which just all it simply means is I created $7,000, yes? If I spend it over here, I no longer have the $7,000. I spent it. If I instead create the $7,000 and move it here, I'm going to keep my $7,000 and deduct it from my income. So the deductions you're looking for are deductions that you get to keep the money first. So I created it. I then take the $7,000 and put it in this traditional, say, IRA account. All this means is, in a very, very basic way, whatever my adjusted income was in my business here, for myself, as it flows for me, I can now deduct another $7,000. So here's a $7,000 deduction that would be like deduction. Here's a $7,000 deduction, but with this deduction, I got my deduction, but I kept my money. Does that make sense to you? The other way would be, here I created $7,000, and I bought a new laptop, the custom-made, highest-level laptop because I needed it for the business. Did you need it? No. But you're like, well, I just don't want to pay taxes, so I'll just buy this really cool laptop. And if you need a laptop for business, okay. But what we do is we create it, and we spend it on shit that we don't actually need over here, and therefore we no longer have the $7,000. Do we get the deduction? Yes. but we don't have the money. Okay. As you pay it in the future, we want to create it and then find deductions, but that we keep the money. Everybody got it? So it's always going to go from here to here, not from here to here. Okay? Now, the Treasury IRA is like a super simple, basic level one. You want a more sophisticated one? Like what the wealthy shit we do? Okay? Watch this one. I'll give you some deductions that you've probably never heard of in your life. So, wealthy people love art. Yes? Inside of art, we'll buy art. Okay? So I buy art all the time. Okay? Very specific pieces at specific times. I buy art. And you're allowed to donate art. Yes? To a 501c3, you can donate art, like there's a charity donation. Everybody follow me? Yeah. And when you donate art, you get a tax deduction for that when you donate art, let's say. Right? And in current year, you can deduct up to 30% of your entire adjusted net income through donating, let's say, art. Okay? So basic math, if I had $1 million on my